Greetings everyone and welcome to GPA Trading Services Master Trader Program webinar. We are absolutely thrilled and so excited that you could be with us. Thank you so much for joining us. We always thoroughly enjoy spending time with our fellow traders. And for those of you that have never joined us before, welcome. We're extremely excited to have some new people with us. And for those of you that don't know me, my name is Tricia Ann Albrecht, and I am actually the co-founder and vice president of this wonderful organization called GPA Trading Services. We're a unique company, and we say that with a lot of pride. We stand out among the masses, which is one of our main goals, and we always enjoy being in front of new faces. So thank you all for joining us, and I'm going to turn it over to Gary, and he's going to walk you through the presentation. And if you have any questions, I would be more than happy to answer those for you, or if you have anything you would like to talk about. So let me know. You can type in and I'll be happy to answer your questions. Okay? So, as I always like to say, please sit back, relax, and enjoy. And let's let this trading party begin. All right? Be a nice end to this weekend. All right? So thank you so much, and here's Gary.
Hello everyone, my name is Gary R. Albrecht. I'm the founder and CEO of GPA Trading Services. I'm the mastermind behind the MPA pe3 software, and the MPA pe3 stands for the Market Price Anticipator software. You'll notice my picture is what I look at every day. This is my trading station. I have multiple monitors so I can monitor multiple financial markets running multiple trades all at the same time. As my wife mentioned, we're a unique company because I'm not only the creator of the software, I'm the educator and the instructor. Now, a brief bio. If you don't know my background, I'm a professional trader for 20 plus years. I'm considered by even my strongest peers to be the technical analysis expert. I'm a creator of one-of-a-kind custom trading software. We mentioned the Market Price Anticipator software. We founded GPA Trading Services 7 years ago in 2010. Prior to that, I was educating thousands of students for over the past 10 years from all over the world. Thousands of students from all over the world, and we're very proud of that. We've conducted numerous live events, speaking engagements, platinum program. We offer one-on-one coaching and mentorship programs. I've been there, seen it, and I've done it all. So with my experience, I'll be able to help you overcome your challenges and make you into successful traders, as we have thousands of members from around the globe. Now, if you haven't had a chance to peruse our website, this is a screenshot of our website. We welcome you to visit. We're very proud of our website. Tonight's topic is the MPA pe3 Master Trader Toolbox, and we have some exciting tools we're going to unveil and reveal tonight. There's so many tools in our toolbox. It's the most comprehensive group of tools you've ever seen, but the key is it ties into what we call the price action indicator and the trend momentum. All those tie into that same process, as we'll reveal tonight. Now, I'm not going to read this disclaimer. I know you've seen this many times, but I will highlight a few. Trading is not suitable for all people. Some markets are leveraged, and therefore it is possible to lose money deposited for a position. A person should only use funds that they can afford to lose, that fits within their overall financial plan as developed by a qualified financial planner. Our rules include never risking more than 2% of your entire account balance on any one given trade. For options friends, we recommend you risk no more than 5% of your entire account balance on any one given options trade. And always you should adhere to strict proper money management. That is a critical component. All information in this presentation is for your educational purposes and should not be taken as investment advice, nor as a specific recommendation or endorsement to buy or sell any specific investment. Trade at your own risk. Now, no matter what you're trading, no matter how long you've been trading, the key is to figure out what are the key components in anticipating future market conditions. The first and foremost is standard rule Everyone understands support and resistance, but many traders are unaware of true support and resistance and how to decipher which is true support and which is true resistance. Just because a market may start to bounce or move higher does not necessarily mean that it's true support. It's just the cycles. As the time frames cycle from one extreme to the other, we're going to get into in great detail. We'll explain at how you can use these cycles as opportunities to look for a bounce or a retracement down, depending on what direction the overall trend is in. The key is not only understanding support and resistance, but figuring out the direction of the trend. Trend direction will and has always been a critical component in successful trading. Now, all of you out there tonight, I don't know the type of trader you are. I'm not saying that if the trend is up, you can't possibly have successful trades to the downside. Sure you can, but you need to understand what those are. It would be a scalping opportunity or a counter trend trade, if you will, and to understand that I'm waiting to buy the dips in the uptrend more than I am trying to sell the counter trend, and I'm more interested in selling the rallies in a downtrend than I am buying the bounce or that counter trend trade toward the upside. But when you add your support and resistance and you combine it with trend direction, you're starting to get an understanding that many traders fail to understand. Now, tying in, utilizing multiple time frames. This is where our market price anticipator software earns its keep in honoring its namesake. It truly anticipates future market conditions by utilizing support and resistance, by defining and understanding the trend direction, and by utilizing the multiple time frames. It goes a step further in how we utilize those multiple time frames, understanding how the lower time frames cycle within the larger time frames, as we refer to it as the line of progression. I use that term frequently. Not only in football, the best quarterbacks like Drew Brees and some of the others, they go through their first progression. If he's covered, he goes second, third, fourth. And those that can go through their line of progression are more successful than a quarterback that's perhaps new to the league, and he looks at his one receiver and he eyes him the whole time. It's easy to follow him and where he's going to throw the ball. Well, trading is the same. You can't focus on one time frame. You're going to get annihilated by the market if you're just watching one time frame. And we'll get into greater detail. So we use the line of progression by aligning those time frames. That's what we'll mean and show you and illustrate what the line of progression is as those time frames cycle. Now in this example, we can see the monthly is in overbought territory. This is the price action indicator and the trend momentum. These are the two components that are the foundation for all of our tools. And we'll discuss several of those tonight. And the key is when you understand when they're in overbought territory, you're going to be looking to sell. And when they're in oversold territory, you're going to be looking for your opportunity to buy. And in this example, we had a monthly with oil in overbought territory. The weekly was in overbought territory. And the daily was in overbought territory. When the time frames align, you know price is going to start to move in a downward direction. But price will never just move in one direction. The time frames cycle with the higher time frames that goes against, with, against, with, against, with, against. And you'll notice how the monthly kept going for months. The weekly started to move, but you see some green candles in these weeklies. And as you go to the daily, you can see even several days of upside pressure during these period of the longer time frames moving in one direction down. So we like to say in this environment, you want to sell the rallies in a downtrend. And now notice the same picture, but from a different perspective. Here's where we still have the weekly and monthly in overbought territory, but notice what the daily will continue to do in the bigger picture as I zoom out. We can see the daily does start from overbought territory. That's that same swing point high. If you'll notice, there's a little red trigger here. We offer triggers when the time frames get overbought. You get a red trigger for a sell, and when the time frames get oversold, you get a green trigger for a buy. And this is the PAI hook and trend momentum cross, which you're going to hear a lot about tonight as well. Whenever you get this hook and a cross pattern, it automatically is aligning multiple time frames. So that's the secret. If you can understand the cycling time frame, well, the key is to What can I use that gives me an automated version of this so that I know when I place my trade, they're automatically in alignment for the down move? Are they automatically in alignment for the up move? And notice this process we call slingshotting. As my weekly kept moving from overbought toward oversold, you receive that PAI hook and a trend momentum cross, hook and a cross pattern. That means this daily is going to move from overbought all the way to oversold. And since not only is the weekly moving, but the monthly was moving from overbought toward oversold, so we're going to expect the daily to do this process we call slingshotting over and over and over. Now you can see it's done it numerous times in this example. As you would sell these rallies, when do you sell them? When the slingshot forms and then engages. And you continue to sell that rally in a downtrend. That's what we mean by following the line of progression. The key is, as my weekly PAI hook and cross, as long as that weekly trend momentum and PAI are down, the daily is expected to exhibit this behavior of slingshotting lower and lower and lower. Knowing that in advance, I can take advantage of this stair-stepping price movement. Here's an example again of a currency pair, the pound dollar. The pound dollar was in the process of beginning a reversal, but prior to that, we see it oversold and it was in a major downtrend. So we're expecting a big bounce because my monthly became oversold, the PAI hooked, and then we see the weekly not only give us a hook and a cross pattern, but the daily, as we got that hook and cross pattern here, what happened? The daily went from oversold all the way to overbought, so it rallied for multiple days and several weeks as this process was unfolding. And again, we can anticipate that in advance. Knowing as I start to get a hook and a cross early on, it's days later that the daily moves from oversold to overbought, day after day after day after day after day after day. And then once it gets up there, like we see in this screenshot, the 4-hour did the same. You have the same hook and cross pattern here on the daily. And what happened? The 4-hour went from oversold to overbought, and then it started to do what? Slingshot phenomenon. Over and over and over. So just remember how easy this is, Sharon. If you know the direction of the trend momentum in the PAI, you know what the lower time frame's behavior is expected to be. And as it's unfolding in that expected behavior, you know that as the lower time frames cycle, they're going to start to slingshot higher and higher. Why? Because the monthly started the trend turning. My weekly had a PAI hook and a trend momentum cross, which told me the daily was going to give me several days of upside pressure. And as the daily kept moving higher and higher each day, the 4-hour would be forced to slingshot higher and higher and higher and higher during those multiple days. And it works in any market. Here's gold. Gold in the same manner. Gold started to give us this pullback, but it had already bottomed and gave us a hook and a cross pattern, and this is a slingshot starting to engage down. So we initiated with selling the rallies first, and then as the time frames bottomed in reverse and gave us fresh new PAI hooks and crosses, we were able to scalp it back to the upside. So we can anticipate selling rallies and then buying dips, all based on the cycles. And you'll notice the weekly was oversold, the monthly was oversold. So even though we expected this little bit of a downtrend to continue short term, we were expecting a massive reversal thereafter, right? So here it is on the daily, moving from overbought toward oversold. And we started to see the same thing, started to engage and started to reverse. My 4-hour initiated with slingshotting lower and lower first, while the daily was moving lower. Then as the daily reversed, the 4-hour reversed and started going higher. And it's just simply following the line of progression. So we'd know to sell 4-hour slingshots lower up and until the daily did what? Reverse toward the right side of this low swing point. And we got a new swing point here, the same swing point on a different time frame with the latest new hook and cross pattern for a buy. So you're able to sell rallies in a downtrend, buy dips in an uptrend, just watching the cycles as your trend momentum and PAI cycle from one extreme to the other. And it repeats over and over and then slingshots higher as we continue to move. Now, instead of showing you just screenshots, let's jump right into the live markets. And We're going to start off with a currency pair. I will be reviewing stocks, futures, commodities, a little bit of everything, because I know traders like the variety of different markets to trade. The first tool I want to continue to reiterate on, which is the key component, is the trend momentum and the PAI. Trend momentum is the king, it's number one. The price action indicator we call the PAI is number two. Their job is to cycle from one extreme to the other, to move from overbought toward oversold, oversold to overbought, overbought to oversold, back and forth. The only time that process is interrupted is through this slingshot phenomenon. And all you got to do is look to the higher time frame during the pound odd here. If you go to the monthly during this down phase, when we were making lower highs and lower lows, we knew the weekly would exhibit this type of behavior because it's following the lead of the monthly. And as the weekly would turn up and the monthly stayed down, you would sell slingshots and sell slingshots and sell slingshots. And yes, we knew this reversal was coming. Since this bottom reversal in the market, I'm looking for this pair to go thousands of pips higher. We're already up 929 in this trade that's ongoing. And notice we have what we call our trade management system. It provides you with on-screen program. Here's my stop loss that's in profit, but if I wanted to move it down, which I never do, I never want to take a trade that's in profit and move it to out of profit. Notice it has built-in guards. Right now I'm up 500 plus pips to the stop loss. It was 300 and something. But if I try to go beyond my entry, it's going to pop back and say, well, you can't go below the area of that entry, and it's automatically going to pop back once we get another tick. But it's on-screen programming, so you can move it wherever you want it. So as this continues to grind higher and we go toward 1,000 pips, 1,500 pips, 2,000 pips in the weeks and months to come, you can move your stop loss deeper and deeper and deeper into profit. And then you simply just lock it in place. Notice it'll change the stop loss. It's at 500 something. And as I move it up a little bit more, it'll change and go to the 300 level. It takes a few minutes for tick data to tick, but it's on-screen pro. Now we're at 452 pips instead of 587 to the stop loss. And it's on-screen programming. And this trade was entered, all of these pips were entered simply by, and check out the trade, it's up over 14,000 on this one trade, simply buying that dip in the uptrend, and it was based on a weekly PAI hook. During the period in which this was pulling back, I was telling our students in our live trade class, the weekly's oversold. We're going to buy it when the daily gives me that hook and cross pattern, and the weekly is deeply oversold, and we're going to expect the weekly is going to reverse and start moving all the way to overbought territory. And notice the weekly over the last multiple weeks has been doing exactly that. Why? Because check out the monthly. The monthly was up. It slingshotted down, failed. This is terms you'll get used to once you join us. But we illustrate it into the highest degree where during this down move, I told our students, you see this indicator moving down and slingshotting lower? It's going to fail. It's going to end up at a higher low. And when this turns and hooks back out, I did this weeks in advance to tell them this is what this is going to do. It's going to turn and hook out. When it does, price is going to reverse and it's going to go on and make a new high above 76.50. So we still have 500 pips to go just to get to the previous swing point, and I'm expecting it to go much higher than that. Why? As long as my monthly trend momentum and PAI are up, I continue to buy dips in the uptrend. Well, not only is the monthly still up, the weekly is still up. And yes, at some point, the weekly is going to turn over and give us a pullback and be forced to slingshot higher and higher in the coming months. Why do I know that? Because as long as my weekly turns over and the monthly stays up, this will slingshot higher and higher in the coming weeks. And many of you might have seen this trade when it was only at a few hundred pips in a previous webinar. Now it's up to 900 and counting. And I expect it to continue to stair step in the coming weeks and months. The monthly's still up, the weekly's still up, so we have a very specific tactic. We buy daily slingshots over and over and over and over as long as that weekly stays up. And even then, for intraday type of trades, you can buy 4-hour slingshot and buy those as well, knowing the higher time frame trend is up. So you buy those dips in the uptrend. So that's just a currency pair. Everybody loves gold. Gold is in a corrective phase and it's about to reverse and go much higher. Randy, I expect to see gold reach $5,000 in the next 10 years. Could be 2 years from now, could be 6 months from now, but gold is going to go soaring higher in the next decade for sure. And again, if the markets start imploding worldwide sooner, which they will be imploding eventually, they're going to cause and force price on gold and silver to go soaring much higher. Well, check out the software, how it automatically knows what gold's going to be doing. We're already oversold on a 1 hour, so I expect to see gold go chop, chop, chop sideways to higher on the lower time frame. My weekly is just about ready to finish and make its new cycle up. So yes, this is a sideways correction, and I'm going to look for a new upwards trend to resume in the matter of days to another week or so, once this cycle finishes. Well, notice, what if I'm an intraday trader? In class, you can go back and see our archives. All our classes are archived. And as this was pulling back, I said, look for this to come back to the bottom of the cloud. I don't know if you like Ichimoku cloud. That's one of the tools. But Ichimoku cloud is nowhere near as powerful as Ichimoku cloud plus the PAI hook and trend momentum cross. When you're in the direction of the hook and cross pattern or the direction of the trend momentum and the PAI, that makes Ichimoku even stronger. And yes, the theory is that if you're above the cloud and start to break below the cloud, that's bearish. And if you're above the cloud and you reach the cloud, it should bounce off. Well, up and until you get the hook and cross pattern, it could slice through like it did here, and it could slice through like it did over there. You need to follow these hooks and cross patterns because it sets up what the time frames are doing and aligns those time frames. So what I've been able to do by utilizing these two customized indicators that I created and been tweaking for years and years and years. Those of you may have heard about the trend momentum and the PAI years ago. This trend momentum PAI is nothing like it used to be. The theory behind it's the same, but it constantly gets updated through an AI interface, through market price and price action. It continues to learn and optimize. As I will bring this to your attention tonight, I just recently optimized another whole set in version 3.9. So every indicator in our toolbox, or every tool in the toolbox, has been optimized. And that's awesome. Each time they get optimized, they're even more and more effective. So where are we headed with this pair? I think we're going to engage, disengage, and continue to stair step higher. Even if we were to go a little bit lower and the daily would turn over and head back down, then we're going to look for perhaps a little bit more of a dip, but it's still going to end up with a higher low and a higher high to come, because that weekly will finish the cycle in reverse. Well, an indicator doesn't have to necessarily go all the way to oversold before it reverses. It can reverse midstream, right? Like down here, it reversed and went much higher when it was still in overbought territory. But it was following the direction of that weekly higher, so the daily's expected to slingshot higher and higher. And as I was mentioning here, we called this in class. And what does a PAI hook and a trend momentum cross mean? Well, on this daily time frame, this price magnifier here gives you the day, price, how many pips up or down, how much time before the next candle closes or opens, depending on the time frame, and what your symbol or chart you're on. So this daily, I was telling our students, look, buy that dip, and it's going to at least make a Fibonacci style retracement to the sweet spot. When you get a hook and cross pattern, the probability of a sweet spot retracement is extremely high probability. So Keith, I said it back when we were bouncing, I said it was at least going to go to 1300. Looking for the sweet spot location. It went to 1306 before then it slingshotted back down. And now that we've bounced the other day, and this is intraday, those of you that trade gold in a futures account, if gold moves a couple of dollars, you can make a nice trade on that. Well, here we got a new PAI hook on a daily, and it's still up. Yes, it's trying to flatten out and maybe slingshot, but the bias is it's probably going to make higher lows and higher highs. as long as we don't cross back over, as we stay up. So I'm watching this, and I told students, hey, next time you get that hook and cross pattern, go long again. And this is about a $30 move higher. Doesn't look like much, but gold can move $30 in a day. And this was a several day uptrend. Yes, we're turning over. Why? Because the 4 hour gave us a hook and cross pattern down. And what does a hook and cross pattern mean? Rich? Remember what I just said a minute ago? If you get a hook and cross pattern, the probability of doing a Fibonacci sweet spot retracement becomes very high. And from that swing point to this swing point, when we started the hook and cross pattern, what happened? It went to the sweet spot. What's a sweet spot, you ask? It's a 38.2, a 50, and a 61.8. So Fibonacci is another tool we use on a daily basis. But we even tie the Fibonacci with the PAI hook and trend momentum crosses, or the cycles, direction of the cycles. So how do we know this is truly going to bounce and reverse, or it just doesn't bounce and continue to go lower? We're going to follow the cycles until it reverses. So here's a little small trade alert for you. When this 4 hour, for those of you that have this software, turns and hooks, we call a PAI hook. This is the PAI, it hooks. You want to buy that, because it's going to bounce and go higher, and then you can reverse it intraday to do what? Well, I got a swing point high to a swing point low. As this would reverse, give me a new swing point low, I can run another Fibo and look for a retracement at least to the sweet spot going up, which would still target about $10, $15 bounce once it reverses and gives you that swing point low. Well, how do I know this is the swing point low? It's probably not going to be the swing point low. It's probably going to make lower highs and lower lows till this cycle finishes, and then we would get a hook when this turns and hooks. Well, let's break down this PAI indicator. It looks like silly string. It kind of goes in its own little world. Well, this green line is called money flow. It takes into consideration the influx and flow of cash going into the markets. It's proprietary software that's got thousands of lines of code that pulls in all this data to know who's selling gold versus who's buying. And admittedly, you can see there are times on a lower time frame it might be up, and on a higher time frame it might be down. But that's why we follow the cycles, and I know when I should be scalping and buying dips versus selling rallies, or in this case, selling that rally to continue in a downtrend. But I do advise this, in the long term, I am definitely, and I already have, gold and silver in my portfolio. You should absolutely have gold and silver in your portfolio, because there's no question gold and silver will be going much higher. Silver is even more exciting than gold. It's a more rare commodity. There's less silver available than gold, and it's so inexpensive right now. And my target for silver is to reach 100, then 150, and the $200 range over that same 10-year period. If the markets implode, like the Asian markets implode, and then the European markets, then all of those trillions with the T dollars are going to continue to flow into the U.S., into gold and silver, and into what? Stock market. So I have projections we're about to go over on the S&P to go up above 3,000 and more if we get those dominoes to fall like we anticipate they will. But up and until then, we could still use the same cycles. So look for gold to do this chop, chop, chop sideways to a little lower till we finish the cycle. And once the 4 hour turns and hooks, that's an intraday scalp. All right? So it doesn't matter what I trade. Let's switch gears and go to bonds. Many people out there like bonds. Those of you that were in last week's webinar, I told you bonds look to sell the rally when we got a hook and cross on the daily and expect we're going to get a reversal. This is when it was still going up, and I told you up and until the daily turn, yeah, you buy 4 hour slingshots, right? What did the 4 hour do? The 4 hour went from oversold to overbought and started slingshotting higher and higher and higher and higher up and until the daily reversed. And then notice the same thing I've been bringing home. We had a swing point low to swing point high when we got this reversal. It should go to the sweet spot. It did that exactly. Well, look at the inverse of this. Once we got that daily to turn back over, we have this swing point low and we have this swing point high, and I'm going to go ahead and change the color on this for contrast purposes. And I'll change this to magenta so you can see the contrast. And notice when I got the daily hook and cross going up, it went to the sweet spot from the previous high to low, sweet spot retracement. And now that it's going from this low and gave me a new swing point high, it should go where? To the sweet spot location when you get a hook and cross pattern. And I can repeat this on every symbol that's out there. It doesn't matter the time frame. So what's unique about this mark is when you add the PAI hook and trend momentum cross to your toolbox, no matter what you're trading, if you use Fibonacci's, you use Elliott wave, you use price patterns, you use candlestick patterns, you use any tool out there, it's going to make it a more efficient tool and supercharge your results based on that cycle and the signs and symptoms of that behavior. And that's what I tell my students. As the time frames move from one extreme to the other, they exhibit very specific signs and symptoms. And what are some of those signs and symptoms? When a daily moves from oversold to overbought, meaning oversold, it moves to overbought, it moves from oversold, it moves to overbought, you're going to expect the 4 hour will not only during that PAI hook and cross move from oversold to overbought, but its behavior should be once it turns over against that daily, it should be forced to slingshot higher and higher and higher and higher. Notice, higher and higher and higher and higher until what? The daily finished the cycle, then the daily reversed and started a fresh new down cycle. So this is what we do every day live and in class. Tuesday, Wednesday, Thursdays, we meet for our live classes, and I average about 2+ hours every class. So you will have opportunity of 6 to 8 hours every week of live instruction. And I anticipate price for you, and we work through the process what we like to call painting the Picasso. I paint and show you with my cursor exactly what the software is going to look like in the coming days, weeks, hours. And the same signs and symptoms we're referring to. What happens when I get a 4 hour to move from oversold to overbought, right? We said we know when a daily does it, a 4 hour should slingshot higher and higher. Well, what happens when a 4 hour moves from oversold to overbought? A 1 hour, as we need to turn the auto scroll off, a 1 hour should do the same, right? It should move from oversold to overbought and then start to slingshot higher and higher and higher. So these same signs and symptoms work on every market, all financial markets. It works on all time frames. So if you're one of those scalpers that just wants to get 5, 10, 15 pips and get out, you can use a PAI hook on a lower time frame. But I'll also teach you the tools you'll need to say, well, why, if you want to just get in at 15 pips, why not let it run to 900 or 1,000 or more? Just simply by doing the same thing you would on the lower time frame, just keep doing it from the higher time frames perspective. And instead of buying 5-minute slingshots or a 15-minute slingshot, you'll be buying daily and weekly slingshots and be in the trade for that much longer. All right? Silver. Silver's in the same boat. I mentioned about silver, but notice here's a different template. Here's your templates folder, and we have numerous templates to choose from. These are beautiful templates, well thought out, and everything in here is included with the software. I'm only exhibiting a couple. We use the Ichimoku chart, but there are these with the triggers, and you can add the triggers to any one of those templates. I just have these preset for you. And why are triggers important? It's built on the hook and cross pattern. Now, there are times when you can get a trigger fire and you don't have the hook and cross. There are other times you get a hook and a cross and the trigger's a little bit later. There's different criteria that goes in the trigger, but when you get the hook and cross and the trigger, it's a win-win situation no matter how you slice it. The hook and cross pattern is the key. So whether I'm using a chart with the trigger or one without it, I still use the hook and cross pattern. This is just an additional visual aid. Remember, well, you say, well, Gary, this looks like a much larger trigger, and this is a smaller one, and they're different colors. Right, they're for different purposes. These yellow triggers represent profit taking. When you're in a position and it starts to move into overbought territory, it gives you warning signs. Hey, you're in this trade, you need to be taking some profits off the table because we're about to get a reversal. And when you're going low, you should be taking profits because we're about to get another reversal back up. It's following the cycles. And not only there, but this software has that interface, right? We talked about briefly. And it shows that when you get a hook and cross pattern, it's telling me, when I see it on a daily, that my 4 hours in agreement. That's what it's telling me. When I get a hook and cross, what does that mean? It means the 4 hour is going to move from oversold towards overbought, right? So let me turn my auto scroll off and show you right here, right? When the daily starts to hook, the 4 hour is going to move from oversold to overbought. And look at that. You can look into this and say, well, I know it's going to last 4, 8, 12, 16, 20. Could be a few days of an upside pressure. Notice on the 4 hour we got a large red trigger. What is that telling me? That's telling me not only is my daily getting ready to start reversing, but my 4 hours ready and even my 1 hour is ready. So we call this optimize or fully optimize or partially optimize. When you get these position triggers, that means the lower and the higher time frames in agreement for a down move. When they're smaller, it means the lower but not the higher in agreement. So this is visual aids to tell you hook and cross patterns means my time frames beneath this, my 1 hour, etc. would be with me. But when you get a hook and cross pattern and a large trigger, that tells me my daily at this point is starting to turn over as well. And silver marched down a few dollars and it's moved lower. This is the key. Understanding support and resistance, understanding the trend, direction, and then understanding the multiple time frames where the lowers are cycling within the higher to allow you to get in on better entries, better opportunities to take profits, and when to maybe close a position and reverse your position, all based on the cycles. But notice the same behavior. This is when the daily started to turn up, and then after we got this position, the 4 hours turning down, it starts slingshotting lower and lower and lower, right? On cue, what's the daily going to be doing to the right of this line? It's going to be headed back down, right? It's turning over and heading back down. Rich, this is powerful, my friend. It's very easy to anticipate future market conditions by watching the signs and symptoms of the PAI hooks and crosses. And what did we say each time and every time? Notice from this 4 hour perspective or this daily hook and cross pattern, right? When we get a hook and cross pattern on the 4 hour, it means my 1 hour is going to go from overbought to oversold. And my daily started to turn. That's what this trigger represents. Not only the hook and cross pattern on a 4 hour, but that one right there told me, hey, your daily's doing it too, even without looking. And then once the daily trend momentum and PAI are down, what do we expect the 4 hour to do? Go from overbought to oversold, and then start to slingshot lower and lower and lower and lower as long as that daily continues to cycle. How cool is that? So that was bonds, that's silvers, commodities, crude. It doesn't matter what you use. It's all about understanding, how do I get the time frames aligned? Do I have to go and see every time frame and say, well, now I understand. I got this one going down. I got that one going up. I got this going down. I got that going up. Well, we took all the guesswork out for you. We incorporated triggers. We incorporated the hook and cross pattern. And even the slingshot phenomenon means, Mike, when I get a slingshot to engage, it means we have found resistance because it's engaging down. And when we get a slingshot to engage up, it means we have found support and we're going to be moving higher. But it also means, from a 4 hour perspective, the reason this 4 hour hooked and crossed here is because my 1 hour went from overbought to oversold. Well, guess what it means when you get the 4 hour slingshot? Right? When we start, what is a slingshot? The actual definition is when this red and blue line, either red or red and blue, race off from green money flow and then snap back like you would a slingshot. But notice each time when it starts to flip and turn, you'll see it does it several times during that daily cycle down, right? When we start to get the hook and then the cross pattern shortly thereafter, early stages, it's also telling me the 4 hour slingshot, and I need to turn my auto scroll back off. and scroll back to show you, it automatically shows me and tells me my 1 hour is ready for that down move. Oops, I left it on. Let me turn that off. Now I'll go back. This will blow your mind every time. Not only do we get triggers to tell us it's time, but what? That 4 hour slingshot is engaging down, and as it starts engaging, that tells me my 1 hour is moving lower. The previous time, it tells me my 1 hour is moving lower. Right? You can rinse and repeat. Here's the other one, the 4 hour engaged the third time right there. I'll just draw it here, and I'll go back to the the 4 hour, and show you. When my 1 hour started to move again from overbought toward oversold, overbought toward oversold, overbought toward oversold, it's simply following 4 hour slingshot over and over and over. So Ronnie, we decided to add to that and said, okay, by the time we officially see this 4 hour turn and hook, the move has already started. Admit that, right? But you can use what we call the hook and cross pattern. If I'm anxious to sell a 4 hour slingshot, why would I be anxious to sell a 4 hour slingshot? Because I can look and see my dailies moving from overbought toward oversold. And as my 4 hour starts to depressurize, I expect it. And what do you mean by depressurize? When the 4 hours oversold, you expect it to depressurize and able to slingshot lower, lower, lower. This is the behavior you expect in advance because the daily is moving from overbought toward oversold. And during that period, I can either wait and sell it here, sure, or sometimes is it hooked, is it crossed? Well, that's where you go and you could get in an earlier entry if you're more conservative. And you want to get the conservative entry, you use the hook here. If you want an earlier entry to get more of that move, you simply use the 1 hour PAI hook and cross. Boom. So we decided to tie that in and then add to it another visual of the triggers. So the hook and cross pattern, triggers, and slingshots, you will hear a ton about. Why? Because it's all about the signs and symptoms of cycling time frame and how we can anticipate in advance what the resistance levels are, what the support levels are as this software pops them in for you. Or if you use it on a Ichimoku chart, doesn't matter. The tools are the same, but you use the same hook and cross pattern on all time frames. Well, let's look at some stocks. Everybody loves stocks. Let's check out some stocks. I was discussing this with one of my colleagues, and we were talking about Teva, how Teva was doing so well and they got in trouble, and obviously some infringement problems and other things. But I was telling them even before all that came out and it was on this uptrend and it was doing well, I said, look to sell it. It's going down because I have a monthly turning over, I have a weekly turning over. Look at this is stocks, works on all markets. I had a monthly hook and cross pattern beginning. And I had a weekly giving me the same hook and cross pattern that started. And look what the weekly did inside of that monthly. It goes from overbought toward oversold, and then slingshots lower and lower and lower and lower and lower and lower. And it's continuing to roll as the monthly is moving from overbought toward oversold. Baba, that's a stock everybody loves. Those of you that were in the webinar last week or previous one, I talked about Baba going again to making new highs. Why? The weekly's turning and engaging back up. Imagine if I had this and I buy a long-term leap and I know I got a monthly reversing going higher and I have my weekly bottoming and reversing, and all I got to do is keep buying slingshots higher and higher and higher and higher, following the cycles. And everyone would say, okay, well, when do we buy a dip in order to maybe get in on that trend? I don't want to buy when it's at the high. I want it to pull back and then buy the dip. That's where these slingshots come in. The daily's been slingshotting higher and higher and higher and higher and higher over and over and over and over, and we're about to get another one. And it's because my weekly is still up. Yes, it's overbought, but it's turning and engaging up. Well, how do I know I'm going to get a decent little retracement? The hook and cross pattern. When I started to get a hook, we really didn't get a cross down, right? We got the hook, But this is just basically on top of each other. There's no separation of a crossover. It's just kind of slightly sloping down. And even during then, I was telling our students, by this dip, we're going to make a new high. All you got to do is do it when the daily finishes the cycle and gives you a PAI hook and a cross back up. Why? Because the weekly is still overbought, but it hadn't given us a hook and cross pattern, that this simply should be just a little bit of a pullback. During the hook and cross pattern, we pegged it and said not only is the daily going to go down several days, it's going to start from that swing point high, right? My daily started to hook and cross, and it's going to go towards the cloud, and when it reaches the cloud and reverses, buy it. And Baba went down from this low of 68 and went up to a high of 90. So if you use a call spread, meaning this is an expensive stock, or if you have that kind of money in your trading account, you can buy call options or a spread, buy an option, sell another option, so you get in at a lower entry price. But it's simply based on the cycles. And sure enough, not only did I tell him it was going to come to the cloud and bounce, but it would come bounce off the cloud, and as soon as you saw the hook and cross pattern, get back in and look for a new high. So it doesn't matter, I promise you. Stocks, futures, commodities, ETFs, any financial market. Doesn't matter. Amazon. Why is Amazon going higher? My weekly trend momentum and PAI are up. So Rich, what do we know about a weekly trend momentum and PAI going up? What do we know when we got the early hook and the cross pattern way over here, even before this little pullback? My daily should go from oversold towards overbought. And as it's moving from oversold towards overbought, it should do what? Slingshot higher and higher and higher as long as that weekly stays up. Fair enough? And we peg that in class. So it doesn't matter what you trade, we have something for everyone. Now, not only do we put it into an automated system, but check out our trade management system. You can tell this trade management system, for those of you interested in automated trading, you have properties in here that you can tell it how many lots you want to trade, where your stop loss take profits are. But inside of here, you can tell it if you wanted to take a trigger long or short by going true or false, simply changing it from true to false. So if I wanted to just buy Amazon dips in the uptrend, I could tell it to buy only trigger longs and only slingshot longs. And then on the slingshot short, you put false, and under trigger short, you put false. So that would allow me to what? Buy the dips in the uptrend. Or if you're in a strong downtrend like Teva, you could tell it to sell the rallies in a downtrend and ignore the trigger long or the reversals up, and then only sell it once that reversal heads back down based on the cycles and the expected behavior. So is Amazon just going to keep going straight up? Price never moves in one direction. Ever ask yourself, why do we get stair-stepping of price action even in the strongest of trends? That's because the time frames cycle. They cycle, they cycle, and when you want to get in on a long-standing trend, you wait for the cycles and you buy these slingshots. It's that simple. All right, let's go to the S&P. I mentioned briefly about the S&P, and I think if the markets implode in Europe and Asia as we move into 2018, 2019, etc., I think that is definitely ultimately going to come to pass. And as it does, the markets in the U.S. have been receiving additional funds continuing to pump in, along with the tax incentives and other things that are working in its favor to help grow the market. But as we look at the S&P, we can talk about the same thing. Imagine if you had this and you were in my class back in 2009 when I warned everyone that we were going to have a market crash. And then once the crash reversed, we started talking about government interventions and how they were not going to let the markets tank again because they were going to constantly keep pumping funds in it. And we expected this long trend to continue. But look, all you had to do was buy slingshot after slingshot after slingshot after slingshot after slingshot over and over and over and over and over. Notice the last time we had hook and cross patterns on a monthly. It was in the first couple of years of the bounce from 2009 early on, but since then we haven't had one since the flash crash. And yes, eventually we're going to have another one, and we're going to have a massive decline of our markets eventually. But I think Europe and Asia are going to decline first, and all of those trillions of dollars are going to pump into the United States markets and help this go much higher. And this will blow past 3,000. My next target is 2614. You still got to keep buying the dips in the uptrend. We tell you to buy daily and 4-hour slingshots, weekly and monthly slingshots. I've been saying that for years and illustrating it in class with our students. And yes, we're getting a little bit of a pullback. Remember on the pullback, swing point low to swing point high, you get a hook and a cross pattern. Where should it go? In toward the sweet spot. It works on the S&P. It works on bonds. It works on currencies. It works on futures. It works on anything out there. The hook and cross pattern is your best friend. And then people would say, well, I like to use volume. Guess what's built in the background of this trend momentum? Volume. Guess what price ebb and flow of the markets? The buying and selling. That's entered into this indicator up here. When you marry the two, this slingshot phenomenon is heavenly. Why do I know to keep buying the daily slingshots over and over and over? Because the weekly is continuing to push higher. Yes, it's overbought, and it hadn't given us a hook and a cross pattern for several weeks ago. And when it did, we knew we were just waiting for the daily to make its cycle. Remember what we said about hook and cross patterns? When you get a hook and a cross pattern, or just early signs of maybe getting a bite of a hook, we don't have a cross. So when you do have a hook and a cross pattern, it was the last time was over here, right? We got a daily hook and a cross, started to hook, started to cross. And what does that mean on a weekly? When I get a weekly to go from overbought and a hook and cross pattern there, what does that mean? Anybody listening from our earlier conversation? And when we got a hook and cross pattern here, it's been a little while. Weekly hasn't done it a whole lot. And then when we had one over here, what does that mean when you get the hook and cross pattern? You keep repeating these. The daily is going to move from overbought toward oversold. Everybody see that? And then the next time we had a hook and cross pattern, the daily is going to move from overbought toward oversold. And what's it going to do? The daily is going to move from overbought toward oversold. Always following the weekly hook and cross pattern. Well, I do the same thing with the daily hook and cross. The 4 hour is going to do it. Or the 1 hour hook and cross, the 30 and the 15 are going to do it, and you can do it through all time frames. So those of you keeping score at home, continue to buy the dips in the S&P, but take aggressive profits. Don't leave an open-ended position without some sort of insurance to the downside. And you want to what? Buy the dips and take aggressive profits. And yes, we're due to get another little dip. Why? Let me go back to the hard right edge. I have a daily hook and cross pattern, and it could be any day now. I'm going to buy that dip and go back long again as soon as it starts slingshotting up. Well, when's the ideal time to buy a daily slingshot? When the 4 hour, for those of you who want an earlier entry, starts to give you a hook and a cross pattern, and we're just about ready to get one during this latest bounce. So look for this continue to stair step higher in the coming weeks and months. Well, I go further than that. I give you this big picture. Yes, we're going to stair step our way towards 2614. I'm not overly concerned about a massive decline until I start to see the hook and cross pattern. Then I know I can trade it downward, or at least some protection to the downside. And anybody a fan of Red Fox back in the day, Sanford and Son? And he would grab his chest and say, "Elizabeth, I'm coming to join you, honey. Here comes the big one." Well, this is going to be this wave 1 going down in 2. This wave 1 going down in 2 is going to be the S&P starring as Fred G. Sanford. And the S&P is going to be grabbing its chest going, "Here comes the big one." And we're going to go down in this wave 2. Now, I can't tell you if it's going to be a week from now, a month from now, a year from now. But once this subdividing wave count finishes and we end up with this super cycle down in 2, we're going to have a 50% minimum drop in the S&P. Well, I can paint the picture exactly what that's going to look like when we start to get the signs and symptoms. When the market finally implodes in the US, which I think will be after Europe and after Asian markets, it's going to look like that, right? So my monthly is not only going to give us a hook and a cross pattern, but it's going to go all the way to oversold. And this one's going to be much worse than the previous one because we're going to drop a lot further and it's going to take longer. So I'm looking for this not only to move to oversold, see the trend momentum 1 and 2, go all the way to oversold. See the price action indicator up here, go all the way to oversold. But I'm going to expect it to slingshot lower and lower as it does so. So this should take probably at least a couple of years. Once the decline starts, we're going to get that massive retracement down. And the monthly is going to give us a hook and a cross pattern. And we'll be able to trade the weekly all the way to oversold. And as the monthly continues to move down from overbought toward oversold, we'll be able to start, instead of buying slingshots higher, we'll start selling slingshots lower and lower and lower. And yes, you can use your swing point low to whatever your swing point high is at the time. And hint, 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 I don't think it's going to happen until after we're at least at 3,000 or could be even more. Because who knows when it's going to ultimately happen. But once we get the signs and symptoms, I'm going to look for at least a sweet spot retracement, which is going to be what? Hundreds of points. And I'm looking for the one, Elizabeth, I'm coming to join you too. I'm going to be targeting a 78.6 retracement. So what does that mean? That means if we're up here around a 3,000 plus range, so you can see I can move this up. So I get to 3,000 range up here. And this would be in the 3,050 range, 3,057 for example. And it starts this decline. Well, if it's at 3,000, we're going to look to be targeting around 1,100. Wow. 1,900 points? Yeah. Is it going to go straight up here to straight down to 78.6? Of course not. Even the last time we had that, it stair-stepped its way down there over multiple months. But we had the signs and symptoms during those cycles. Started with the PAI hooks and followed through with the slingshotting lower and lower on the lower time frames. Mark my words. Yes, we're going to go higher first, but eventually we're going to get the big crash. And when it comes, it's going to be ugly. Be real ugly, but this software will protect you. All you got to do is follow your hook and cross patterns, and you get Fibonacci extension retracements, and we know what the targets are. We teach you how to convert a Fibonacci retracement into an extension all in one, retracement extension scenario, and we also teach you how to show a price on that Fibonacci. So my 38.2, it'll tell you exactly what that price is, or my 68 or 88, 78.6, etc. We teach you all that in class, and it's a great tool. Now, give you some tradable ideas. We're going to 26.14. We're going to continue to stair step. So how do I know when I go long? When the daily engages back up. We keep buying it as long as the weekly and the monthly are up. What happens if my weekly does, in fact, give a deeper retracement and I get the hook and cross pattern? Then I'm going to expect more downside pressure. And I'm going to expect what? Price to start to give us a deeper retracement. As I get a hook and cross pattern, then I can expect the daily will move from overbought toward oversold once I get the hook and cross pattern. So if I don't get the hook and cross pattern, what do? I keep buying daily slingshots. The strategy's easy. You know it in advance long before it happens. And what happens when a daily hooks and crosses? We pegged this in class. We said the 4-hour would go and test the cloud. And then as soon as it bounced, you could scalp that up, but I'm still not convinced this is the breakout just yet. I want to see this finish that cycle and let the daily finish and depressurize further. Well, how do I know? Well, during the signs and symptoms we talk about, if my 4-hour turns up and the daily does not engage, meaning this doesn't turn and go up, then the 4-hour is going to be forced to slingshot lower, allowing the daily more time to set up. But eventually, I'm going to get a daily slingshot. I'm going to buy it. That's how cool it is. So put your mark up there at 26.14 and look for the dip and buy the dip via slingshots. And you can use your Fibbo sweet spot location, as I told them during last week's classes. Look for the S&P to go down. We had a 4-hour that started to show some progress where it was starting to turn back up. And I said, look for this to turn back over and ultimately go toward oversold, because the daily is going to continue to depressurize, and look for this to make a move down to the cloud. And this was a very significant move. Those of you that trade E-minis, you die and go to heaven if you can get a point or two. Well, in this class, with this software, we get 10 points, 100 points, or more on a regular basis. Not a single point. Well, you can fish down there at the lower time frames and get a point or two. A hook and cross pattern, you'll make way more than a point or two. You'll end up getting 4 and 5, 10, 15, 20 points. And the higher the time frame hook and cross pattern appears, the more the points will come your way. Okay? All right, now we took all of this information and we combined it into what we call a slice of heaven finder. Slice of heaven finder is, how do I know when the time frames are aligning? I can set up a scanner to scan through all symbols within this platform and tell me when my 4 hours getting ready, a 1 hour or 30, and how to go about trading it. Well, we can customize that. What if I'm a position trader? You can set it up by going in the properties and changing the 4 hour to a monthly, a weekly, a daily. You can set it on any time frame. Well, what does this do for me? Well, I don't trade directly off of the scanner. It tells me what symbols I need to go look at and put on a chart. Then I can go from there and I know automatically where slingshots are forming, optimize short, engaging down, forming to trigger long, right? Tells you where the triggers are, where the slingshots are, where the time frames, where they're forming, where they're located. So now when I pop that symbol onto a chart, I can follow my hook and cross pattern from there. And the second scanner we offer is a particular scanner where that one scans all symbols. Well, let me go back to let me finish my conversation. In this platform, you have over 800 symbols in which to choose from, something for everyone. If you want stocks, there are a few hundred stocks in here. All this yellow section is stocks from the US, which there are a few hundred in here, and a total of 800 plus symbols, so there's something for everyone. Well, Gary, what if I don't want currencies and ETFs and bonds and everything, all symbols that are in here? You can customize it, right? Everything's customizable. You can come over here to sets, and you can see I have some Forex and different sets in here. You can name it. This is the Sharky set, and it might just be all US stocks, or it could be US stocks, gold, and the Dow. And whatever symbols you want, you would set up, and then you would add that set, click on it, and it would only load of those 800 plus. It would reduce it to, say, the 50 you're interested in. Then when it scans, it only scans those 50 you're interested in. How cool is that? But this is set up where it's scanning everything. Whatever's in here, it's going to scan through it. And you notice every few seconds it scans a new symbol. And it goes in order, which the ones you see in this we call the market watch. And there's AVGO. It scans everything that's in there, and it'll scan through it. And if it finds something, it'll pop it on the screen and call your attention to it. So remember, if you don't want all 800 symbols for it to scan through, you can say I only want stocks. Set it up through this sets where you go in and remove these, right here, say sets, remove. And you can go in and remove a set if you make a mistake, or you can set it and save whatever your set you want. So like all US stocks, for example. And I can name that the Sharky set. So you'll see the name Sharky up here, and that would be all my US stocks. And then it'll only scan those. Well, what about the slingshots, the triggers? That tells you kind of what the picture is, but check out this scanner in this platform. I have several platforms running at the same time. We have a scanner we can set up, and in this case, it's only currency pairs. But if you want only stocks, you could put stocks in here. If you want accumulation of maybe a currency or two, some stocks, gold, oil, S&P, etc., you can set to whatever your preference is, and you can scan across. Why is the scanner important? It tells you where your support and resistance levels are. It tells you where the current price is. It gives you everything at a fingertip. It tells you where your time frames, all time frames, 1, 5, 15, 30, 1, 4, daily, weekly, monthly. It tells you what direction the trend momentum is, up or down. Is the trend up or down? It tells you where the triggers are firing. We've got a green trigger up on a 15. On this pound dollar, we have a green trigger up on a 30-minute. We have a down trigger on the dollar Swiss. We have a red trigger down on the dollar yen, etc. Time frames, what triggers are firing. And again, I add this to a chart. I go and follow the cycles, and I know whether I'm buying dips in an uptrend or selling rallies in a downtrend. And this scans everything for me so I don't miss the next big move. All right. I could literally sit here all day long and just review tool after tool after tool. We're just barely scratching the surface of the tools we offer in this software package. Again, for those of you that might have joined us late, within the automated trade management system, you can set it to trade automatically simply by click and dragging, getting it ready to trade. As soon as you get a tick, it'll say ready to trade, and I can buy and sell it right away. Or if I don't want to buy or sell right now, I can leave it in the set mode, and then during the set mode, I can set it to whatever time frame I'm interested in, and then go in and tell it, okay, I know the S&P is going to be buying the dips in the uptrend, so I only want to buy a daily slingshot engaging up. Right? When this engages up, I can set this automated trader to buy it once it engages. Or I can set it to the 4-hour, because I'm a little bit more aggressive, and I can set it to the 4-hour and say when the 4-hour daily is likely to engage, it's when the 4-hour gets oversold and we get a hook and cross pattern on the 4-hour. I can tell it to buy that trigger up on the 4-hour, and I'll leave it in the loaded or set mode. And then once that criteria is met, it'll automatically enter the trade for you. So again, I can use it manually. Oh, I got a great setup. I want to go long right now. Click and drag to trade, ready to trade. It'll tick, and then you do buy or sell. And then if you don't want to do it automated to the point where, immediate entry, then you set your criteria to say, okay, what that means is, in this case, I can allow the S&P to go lower even if it lasts multiple days until either the daily goes all the way to oversold and turns up and triggers higher, or the daily engages in a slingshot up. So I have the opportunity to set my preference to go in here and say, okay, on this daily time frame, I want you to trade the trigger long. I don't want you to trade it short, so I'll tell that false. And I do enter it. And on the slingshot short, I don't want to go short, so I'm going to tell it false. I only want it to buy slingshots. Right? Use slingshot long? Yes, true for that one. Use slingshot short? False, because we're buying the dips in an uptrend. And you just simply enter the data into this control panel. And then once it's set, you'll say OK to your criteria. Then you just click and drag to trade. And when it ticks, it'll say ready to trade up here. And that tells you it's armed. Kind of like you arm your alarm system at home. And when it's armed, you know that anybody opens a door or windows, it'll click and drag. Sometimes it'll do it, and you got to do it again before it takes. If the price is moving too much at once, it'll automatically shift back and allow you to then set it up. And it's all automated. All right? So instead of sitting here continuing to pound you with all the tools, let's talk about why we're here. Okay? So,
we went to the charts. We covered the charts.
Right. So here's some trading results. Automated trade management system used on gold. Remember what I said about gold? You can make some money on a couple of dollar move. Well, this was a $126 move higher. Simply aligning the time frames, buying the dips in the uptrend, allowing the system to enter the trade. Here's gold to the downside. Not a mere $10 or $15 move, but a $150 move. Simply aligning the time frame, hook and cross pattern, selling the rally in that downtrend. Very simple. Here's a student that uses our signals and trades in his TradeStation platform. He traded multiple currency pairs as they were setting up using the Slice of Heaven Finder. This guy right here, Slice of Heaven Finder, he had it set on the monthly, weekly, and daily time frame, monthly, weekly, daily. And as he set that, he had multiple setups for some major moves on multiple currency pairs. And what did he do? He ultimately went on to make 8,600 pips. But because the time frames were aligned and he saw the weeklies and the monthlies still moving lower, he let it run. And he went on to say he attached the screenshot and went from the 8,600 to 18,311. And he's persistent with continuing to watch this 3-lot mini trade setups he's been using with the Slice of Heaven Finder. And he continues to let these run on and on and on. Now here's a screenshot of the same trade station, now up 18,311 pips. Gold. You can make a fortune on moves on gold. Here's another one again. $110 move showing you big funds that you can make on simple few trades. Watch this trade. Remember the pound odd we in to the upside currently, up 900, almost 1,000 pips. Well, this one was back a few months back, and this is 778 pips. But my weekly and monthly were down, so we let it run. So Rich, guess what? That same trade continued to extend lower and went on to 1,274 pips. And because the weekly and the daily and the monthly was still moving, we let it run, and it kept going to 2,270 pips. Well, we weren't stopping there because the monthly and the weekly and the slingshots keep going and keep going. We let it run, and it went to 3,627 pips. Right? Here's one, pound CAD. Over 3,000 pips. We're not talking 10 pips, 5 pips, little instant little scalping. Well, if that's all you want, that's an easy deal. You just go to the lower time frame. But if you want these big number trades that are so easy, you just simply follow the line of progression, use the hook and cross pattern we reviewed, and use the higher time frames to allow those to run. 3,200 pips. Now there's another tool we didn't even get to review tonight, but I can just illustrate it off of this chart. We have a bracket and a breakout trade, two different ones. A bracket trade is one that you can have a high and a low and say, okay, if a stock breaks the high, I want to go long, or if a stock breaks the low, I want to go short, or currency, etc. Gold, oil, any symbol, it'll work on. And you set it. Well, what if you want to do this, and we have one for the London session for currency traders. During London usually will have a reversal occur during the London period. So during the first hour or so of London, you want to look at the high and the low. If it starts to break the low, it's usually a good sell. If it breaks the high, it's a good buy. Well, guess what? We are not only using the system, but we're using the line of progression from the higher time frame. So in this example, we allowed the break of the low to run for 272 pips on a breakout trade. Here is an options trader, one of our students that been with us for years. One thing you'll find about GPA Trading Services, Mike, we don't have students that come on one day and leave the next. We have students that come on one day and stay decade and longer because the system works. And they like our style, they like our software, they like everything about it. Well, in this case, options traders say, well, I don't need software. Options traders don't need software. Well, when you know the direction of the market, underlying value of the market, if it's going to go up, down, or stay sideways, it certainly helps you to have more profitable options trade. And in this position, he said he took profits, made 1,200, and then got back in and took another 300 because of that line of progression. And he said if he'd have done this on his own, he'd have lost money. He'd have bailed and lost money. But he ended up making a huge profit. And he went on to say as he was just learning the system, he was able to pay for his subscription in a very short period on a couple of few trades. And he's been with us for years. He went on to say that he dropped his financial advisor in several newsletters, and he applied for a Forex account to be added to his Thinkorswim account. And he's got brokers that he in Australia that he told them exactly when to buy and sell certain commodities, etc. So he started trading himself and his retirement accounts, all because of this software. All right, the Master Trader Program. It consists of the software, which again, you've only been introduced to a few components, and there are so many more to come. And we have the live trade class. We meet Tuesday, Wednesday, Thursday. If you're unable to attend because you're a job or something or prevents you from attending or somewhere in a different part of the world, then we archive it for you. But the good news is, how can I watch a previous class and be able to get hot trade ideas from it? It's based on the line of progression and the cycles of those time frames, and I set the class up in advance telling you in the next couple of weeks we're going to get a reversal, and when you do, you want to buy this based on this, this, and that. So even watching a class that a few weeks ago, even a few months ago, Randy, you can get in some very high quality trades. But by attending the current classes or watching the current video, you'll get the latest market review. And that'll be our market review this Tuesday. All right, what is the software? Some of the components. The market scanner, we briefly showed you. That's the one that scans with the slingshots, the triggers, arrows up and down, all time frames. You can customize it to whatever symbols you want. The Slice of Heaven Finder, we briefly showed you that as well. That's the one we can customize so it scans every symbol in the database, but I can customize it to only stocks or only Forex or a little bit of both. Whatever I want, I can customize that. These two primary job is to get you the next big setup so you don't miss the next big trade. The MPA Slingshot Trade Triggers. It's all about slingshot trade triggers and hooks and crosses. And one thing I didn't get to mention, Sharon, the hook and cross pattern is a precursor to a slingshot. You got to get the hook on a PAI in order for it to race off and hook back to slingshot. So it's the precursor to a slingshot. The trade management system you briefly saw, illustration. We have a Platinum Asia scalping system. We have a Triple P scalping system. We have that breakout system, both a bracket and a breakout trade system, which we briefly showed you, and you can understand the importance of how I could benefit from something like that. We like to show you 10 reasons why the MPAP software, the top 10 reasons why our software is the best software ever created. And I'll hold it against anybody else out there, talking heads, professionals, hedge fund managers, this trader, that trader. He could be the guru of chartings. He could be the candlestick expert. When you add a hook and cross pattern to a candlestick formation, it makes it a higher probability trade. When you add it to Elliott wave, to Fibonacci retracement, to anything out there, it'll make it more effective by utilizing the hook and cross strategy. All right, it calculates support and resistance level. I no longer have to guess, where's my support? Where's my resistance? Where should this start to bounce? Where should it start to reverse? It identifies, I clicked too soon. It identifies the trend of each time frame. Remember our opening slide that said we need to know support and resistance, we need to know the trend direction. It identifies that trend of each time frame. It monitors and tracks those time frame cycles. So it tells you based on the lower time frame cycling and the higher, what are we expecting? By all of that, it provides consistent entries, exits, and take profits based on what? Those trade triggers, those slingshots, the hook and cross pattern, and those profit triggers. The trade management system, we can set in advance where we customize our entry to buy the dips in an uptrend. I set it so it's armed. And when that criteria is met, it'll automatically enter the trade, whether I'm asleep, away from my computer, enters it for you. And the stop loss, take profits, all that information's entered at the same time. You can automatically manage your trade from start to finish, including, like I was showing you, if I'm at my chart and I go, ooh, I want to buy the euro dollar because it's going to go higher, then I can instantly use the ready to trade, click and drag to buy, it enters the trade long, and it'll manage it from entry to exit. It fits any trading style. What we teach you works on all time frames and works on all markets. The dual scanners, remember we showed you those? Scan the market for the next big trade. Number 9, works on 800 plus symbols, including stocks, Forex, futures, ETFs, commodities, bonds, you name it. Whole plethora of things to choose from. Enough for everyone. And no, it does not work on every stock, but no one out there, Ronnie, trades every stock. Nobody does. I don't care who you are. It's unnecessary. Most people find a handful of stocks, 5 or 6, that they follow and learn so they can get better results from. Well, you don't need to follow and learn. All you got to do is follow the line of progression and follow the hook and cross pattern, and you will get your successful trades over and over and over. And number 10 is the key. It consistently delivers low risk, high reward, high probability trades. Every day, every hour, every year, every decade. And this system can never become obsolete because it's got an AI interface that's constantly updating and upgrading. And there's always markets, no matter what happens, crashing markets, soaring markets, sideways market, the time frames are still going to cycle, and you're always going to get those signs and symptoms. All right, now, for those of you attending this webinar, we have some special offers. We're going to pay it forward. If you go to our website right now and you look up our annual trader program, the price there is listed for $4,997, and it includes the software, your classes for a full year. Worth every penny, because again, even at this price, a few trades and you'll make that back no problem. Well, we're not going to charge that tonight. Previous specials, we reduced it to $35.64. Well, guess what? I'm going to make you a better offer than $35.64. I'm going to lower it to $24.97. That's 1 year for $2,497, 12 months of the software and the class. It includes all upgrades. I upgrade the software frequently. We just did. I just released it this week, a couple of days ago, 3.9. So if when 3.91 or 4.0, etc. comes out, you'll get the new updates. And for those that are interested in this annual, here's the link. So you want to type this in to your browser, and I'll have my associate post that link in just a moment. But this is not all. Guys, because you took your time out tonight and gave me the opportunity to spend some time with you this evening, for the first 50 people, I'm going to give you 2 years at $24.97. Basically $100 a month for this software and 6 to 8 hours of class instruction, which would average out $100 a month. You make the one payment for $24.97. And all you need to do is you just simply type that into your browser, and I'll post it for you in just a second. Let me move this out of the way, and I'll type that in the browser up here. Okay, so we have this www.gpatrading.com/amember/sign-up/annual 2497. And when you click on that, it'll go to our website, and it's going to open up this page, and you can see I'm already ready for you. Ty, you just put it right there. $24.97, you get 2 years access. So here is the link. I will paste it in the chat dialog for everyone. So you're basically getting a year for free at one of the lowest prices we've ever offered. And here's the link. So you should be able to click on that hyperlink and automatically go to this page. I already see some people signing up. So thank you. I appreciate the new students. You will not regret it. And if for any reason it doesn't hyperlink for you, then just copy and paste it and put it into your browser. Okay? And as you can see, it is the one payment, $24.97, and it gives you the 2 years access, which includes the software, includes the classes for 24 months.
You have immediate access.
And you have immediate access. You'll get a download. Once your payment goes through, you'll get your username and password. You can have access to the back door of our website, and it gives you access to all the information, videos, educational members area for your videos, your educational materials, to download the platforms, download and install the software. Everything's there for you, and I'll show it to you in just a moment. Now, if you're unable at this point in time to take advantage of this unbelievable special, 2 years for $24.97, we're offering a monthly subscription. And that monthly subscription is the same. For $2.97 a month, you'll get the software, all upgrades during that period, and the live trade classes. And I'll post that link for you. So all you need to do, and just 1 second while I post that for you, and I'll pull that one up over here as well. So I'm going to go in here, and I'll change this from, it's the same thing, but it's monthly, MONTHLY, 297. And when we go to that one, you can see it is the software plus classes for $297 a month. And I'm going to post that link for you. All right. So everyone have what you need as far as the annual. I'll pull that up again. Okay, so now I have both of these up for your viewing pleasure. Those of you for the phenomenal 2-year special, $24.97, 2 years access. You go to that web link, the annual $24.97. And for those of you that are at this point want to try the monthly, we have the monthly $297 link. And this is the pages you'll arrive on once you click on them or paste it into your browser. All right. And there's that link I showed you, and it has been posted for your ease and convenience. First, let me say thank you for attending the webinar. We look forward to you joining us. Remember, the Market Price Anticipator software is the most powerful, unique software ever created. It empowers you to read and anticipate price in any financial market on time, in time, all the time. If you have any questions for us, please submit your questions to support@gpatrading.com. support@gpatrading.com. And what we're most proud of, not only of our software, our website, and the manner in which we conduct our live trading classes, we keep them fun, informative, and exciting. But we're serious about trading. We've been educating students from around the world. We have 117 countries and counting represented on our world map. So if you're from a country and you don't see your flag, we welcome you to join us, and your flag will appear on our world map. How cool is that? But what we're most proud of, again, as I stated earlier, our members have been with us for years, not days, weeks, or months, year after year after year after year after year since the inception. And that ought to tell you something. If the system didn't work, or was a bunch of hype and there wasn't anything behind it or substance, then the students wouldn't stay here year after year after year after year after year. And we're proud of that. So let me go back to this page so you can see those links. They have been posted for you so you have easy access to them. But again, we're already set up for the annual. There's the monthly, and here's the annual. We prefer you sign up for the 2-year access. It's lower overall costs for 2 years. And Ronnie, in 2 years' time, you can not only pay that $24.97 back of your investment. That's simple. That's a matter of a trade or two. But think about after that first trade or two and you've paid the $24.97 back, you'll have an additional 2 years in which to make pure profit. Simply following the line of progression, following the signs and symptoms of the cycling time frame as they turn over. And as they do, we're going to buy this dip in the uptrend. And it's all about the signs and symptoms of cycling time frames. It makes it so easy and convenient. And it sounds like, well, there's a little learning curve to this. Not really. If you just think about the cycles, when a monthly is up and a weekly is up, the daily will go into overbought territory and start slingshotting higher and higher. When a monthly or weekly are down, the daily will go from overbought to oversold and start slingshotting lower and lower. And it doesn't matter what you're trading. Here's crude. Crude is about to have a massive reversal. It's been grinding higher for several months now. Yeah, it's supposed to grind higher for months. Why? Because our monthly cycle is up. Pretty simple, isn't it, Sharon? And what happens when this turns over? Which, hint, 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 we're going to go a little bit higher, and we're going to reverse and start going down big time when I get my monthly and weekly cycles. Check out the weekly. The weekly is in the early stages of a hook. What is a hook? If I get a hook and a cross pattern, right? A hook and a cross, that tells me this daily is going to move from overbought toward oversold. The last time we had the beginning of a hook and a cross pattern was when we started to engage here, and we didn't even get a hook pattern here. We just got the hook here, but not the cross. And what did the daily do on a hook without the cross? It still went toward oversold territory. And what was the expected move? We told people in class, as this pullbacks, buy the dip. Why? Because the daily is going to be forced to slingshot higher and higher and higher in the coming weeks. Why? Why did I know this in advance? Because my daily turning over against a weekly that's up and a monthly that's up, that's the behavior it exhibits over and over and over. So it's pretty easy to see why we expected this weekly would go from oversold to overbought. During this period, we were talking about this going much higher. And even though I know it's going to give me a massive reversal and go much lower in the months and months and months and months to come, we need to finish these cycles. And we continue to rinse and repeat on the signs and symptoms of those cycling time frames. So in the coming days, if this ends up giving me the hook and cross pattern, then yes, what are we going to do? We're going to take our swing point low, and because we're just about to get a hook, and we don't have a cross yet. If I get the hook and a cross, what does that mean? We have a high probability of oil stair-stepping, crude stair-stepping lower to at least this sweet spot. All right, here's my little sweet spot location right there. And what about this one? What about if we go down here? Then it's the bigger picture. Well, how do I know which one to use? I use them both, because when I'm looking for the first little area, it gives me targets. And if it continues where I get a hook and cross pattern on the weekly, which again we don't have yet, we got the early stage of a hook but no cross. You get the hook and the cross, then we're definitely going to go down to 51 area or lower. Right? Simply hook and a cross equals the daily retracing, going from overbought to oversold. So now I have roughly 6 targets. I got a 38, a 50, and a 61 in this little box. And I have a 38, a 50, and a 61 right here on this retracement level. And this will be my downside scalping targets for black gold to stair step down towards. Well, what about the daily? We don't have a hook and a cross yet. We started the hook. We didn't get the cross. It's kind of sloping down, but we don't have the separation. Remember the last time we got the hook and cross pattern on the daily? Where did black gold go? It went on the 4-hour, and it went from overbought. Let me go back to that area. It went from overbought toward oversold, right? What else did it do for us? Went from overbought toward oversold. Well, how far did it make the dip? How far did it go? Check that out from the daily perspective. We had a swing point. Let me turn that back on. We had our swing point low. Last time the daily was oversold was in this area. And we're expecting, like I was talking about now, looking for this retracement to come. Well, what about the last time it was here? Remember? Last time it was here when I had that hook and cross pattern, what did it do? It went from the swing point low to the swing point high. And what does a hook and cross pattern equal? Fibonacci sweet spot retracement. Rich, you can't make this stuff up. Hook and cross pattern on black gold, Texas T, the Beverly Hillbillies. We pegged this target for the students during that class. So anybody trades oil out there? Again, depends how you're trading it. They have ETFs, there's puts, there's futures contracts. There's many ways to trade this. And during that little retracement, we knew from that swing point high to swing point low, we were due for a Fibonacci style retracement. Why? Hook and cross pattern. The steeper the slope, the more angle and separation, the higher the probability. Wow. But this is on a stair-stepping affair going higher. What about the last time the 4 hour was oversold and we did a hook and cross pattern starting to come down? I can rinse and repeat this thing over and over and over. Here was my swing point low. Here was my swing point high. Where did it go? Sweet spot location. Why did this engage and then disengage and then start to slingshot higher and higher? As my what? My weekly was going up. My daily, if it tries to turn against it, should fail. And when it finally turns over, it should slingshot higher and higher. But notice during the first hook, cross, sweet spot. You go on to the next one. Hook, cross, sweet spot. You go to the next one. Hook, cross. Well, Gary, from this swing point low way down here, we didn't quite make it, right? But from this one, we made it. Well, how do I know which one to use? Because I tell you which one to use in class. And this is the last time we were oversold. I would use this one first before I would go to the second time we were oversold on a daily. But notice, every time you get a hook and cross pattern, you get a Fibonacci retracement. You get a Fibonacci retracement. You get a Fibonacci retracement. Sharon, that's giving you a target in advance. Long before, as you get the early stages of a hook and a cross, it gives you the early stages of tentative targets to shoot for. And as long as the hook and cross pattern continues to navigate, it's definitely going to fulfill that destination. So any currency traders out there, we love Forex market. We love them all. I trade them all, and I have 7 different brokers. I trade stocks, futures, commodity, ETFs, bonds. I trade everything. And I use this same software on all of it, and I place my corresponding options trade in my options brokers, and I trade my corresponding stock trades utilizing the single signals from here. So euro dollar. Euro dollar is on a retracement. Why? Look at the direction of the weekly. Uh-oh. Trend momentum PAI down. Hook and cross pattern. Where is it likely to go? It's likely to keep stair-stepping down to this area. Well, my blue line and red line are kind of raced off together and green's kind of flattening. Well, it's still down at the moment. It's not up. So what does it mean? My daily is going to depressurize. There's your trigger, hook and cross pattern. So what do we do with this? We expect the euro. The last time we had a major swing point up here when we went overbought territory is a couple of them. Everybody with me? There's one in this area, swing point low to swing point high. We would expect it to go to the sweet spot. Where to go? Hook and cross, right to the sweet spot. Well, what about if we use this one? Not quite to the sweet spot yet, but there's a little bit further upside to go. Or if I use the last time we're truly overbought, which is this one higher. Well, in each case, neither one is wrong. It gives me levels to shoot for. But I'm still looking for the euro to do what? Slingshot lower in the coming days, because the daily going up against a weekly down says the daily will slingshot lower and lower and lower and lower. Everybody with me? So look to sell this rally and sell it back to the downside. But if I wanted to scalp the euro, I could have made about 100 pips so far just scalping up. But I'm more interested in selling the rally than buying the dip at the moment. Because as long as my weekly stays down, we sell 4 hour and daily slingshots. And I'll close with this. Right here on the US dollar index, you can trade the dollar index, or you can understand what does it mean to other markets when it goes up and what does it mean when it goes down. We're in the midst of a multi-month rally on the dollar index. I believe it's in a B wave correction, then it's going to go down in a C, and then once this 4 is over, we're going up to 120, 125. I think this destination is a guarantee. No way we're not going to get up here. The question is, what turn-by-turn GPS coordinates do we take to get there? What scenic route do we go to get there? Or is this 4 already over and we're just going to keep grinding up there for another year or so, and we're going to get up there now? We're definitely going to go higher. So how do I know that? Same thing. When I go to my weekly time frame, I have a weekly hook and cross pattern. That's why I told everyone to sell the euro and buy the dollar index. Hook and cross pattern, when you got a hook and cross pattern like this, what does it mean? We're likely to go up into the sweet spot. Yes. And we're about to continue to grind this. Well, why are we getting a pullback on this weekly and starting to see this turn and flatten a little bit? It's not slingshotting yet, officially, and the trend momentums are still up. So my daily is going to be forced to slingshot higher and higher, and this is another one coming. Everybody with me? So buy the dip on the dollar index and watch where this is in the next several weeks. And during the dips, you can trade those if that's what you want to do. We got a hook and cross pattern, and the last time we had a swing point low was over here. So what does that mean? I should target on the S&P, on the dollar index going down. We should target a 38.2. Where did we bounce off of so far? Yes, my daily hadn't reversed yet. Right, Johanna? My daily hadn't reversed yet, but it still would go to the sweet spot. A hook and cross pattern equals a sweet spot retracement. Most powerful thing there is. So again, with that, I'll say we appreciate your time and attention. Yes, we'd prefer you do the annual, given the 2 years basically averages out to $100 a month for this unheard of software, and 6 to 8 hours on average class time, live trading, where I specifically go through and paint the Picasso, tell you exactly what to expect, what to do. We put tactics on our charts. What is my trading tactic on the dollar index? It's pretty simple. What a tactic is my plan of action. I'm going to buy daily and 4-hour slingshots higher. Why? Because my weekly trend momentum and PAI are up. We've been doing it for weeks now and even months, and it's paid dividends. And we tell you what to look for. So that buy the next daily, buy the next 4-hour, and look for this to keep stair-stepping higher. And how do I know when my position is going to turn against me? When you get a hook and cross pattern, you draw your little fibbo and you look for areas where it might pull back to. Then when the cycles reverse and go back up, like that daily slingshot back up, you buy and go long. Well, when's it likely to go long and buy that? As my 4-hour starts to depressurize. If my daily doesn't engage when this turns up, then I'm going to look for this to go lower, slingshot down, following the direction of the daily at the moment. Then I'll buy the next 4-hour hook. Why? Because one of those is going to force the daily to engage. And that's the whole point. Even when these hook and cross pattern intraday, we'd have made a point on the dollar index. Anybody trade that? A point on the dollar index, you can make a lot of money on. Simple little move. Fair enough? So again, doesn't matter what market you trade. Once you learn the system, it works in all markets, all time frames. The same hook and cross pattern works from the 1 minute all the way to the monthly. The same principle behind a hook and cross pattern on a 5 minute means my 1 minute's going to go from oversold to overbought if it's hooking up, and if it's hooking down, it's going to go from overbought to oversold. Just like when a hook and cross pattern appears on the monthly, the weekly is going to go from overbought to oversold when it's hooking down, and the weekly is going to go from oversold to overbought when it's hooking up. Think about if I trade options. Do I go out a month? Do I do a weekly? Do I do, a leap? What do I do? The hook and cross pattern, where they appear and what time frame they appear on, helps me to decide how long I should be in that trade. For days, for weeks, for months. And my wife keeps posting that link for you. But we've been together about an hour and 45 minutes.
You love to teach.
And I love to teach. I've been known. I had a 6-hour boot camp. 6 hours, non-stop. We conducted a 6-hour boot camp, and we didn't charge our members a nickel.
Because we enjoy it.
We just love doing it. 6 hours. Imagine one of those talking heads out there that think they're so important and they're so above everyone else. They dare do anything for 6 hours without charging you? I don't think so. We're different here. Absolutely different. So I will bid you adieu and say goodnight. For those of you that have joined us, we have several people joined us already.
We'll see you on Tuesday.
And we'll see you on Tuesday. Just real quick, I will pull this up to show you what it looks like. You will go, once you get your username and password, You'll click on the members area. You'll log into that. And I'll just go ahead and log in. So you'll get to see what the back door looks like. Members area. Well, it's the back side of our website. My wife says the members area. It is the members area. And once you're in there, you'll see your active resources. The class schedule, your replays on demand. You simply click replays on demand, and you'll see the whole list of all the different trades. And the last couple of classes, I released the newest version, the 3.9, and I went on how you update the software and then use your new templates, everything you need. We talk about the cycles, the cycling time frame, painting the Picasso, to buy the dips in certain currency pairs or stocks, commodities, futures, whatever we reviewed that day. It's all there, and all you got to do is click and view it for your viewing pleasure. And as well, inside the active resources is where you'll find not only the classes and the archives, but to download the platforms we demonstrated, the software, learning modules, educational materials. Everything is here for your viewing pleasure. Okay? And all you got to do is click on the $297 for the monthly link, sign up. You'll be a part of it on this Tuesday's class, or the annual $24.97. But I welcome our new students not only to join us on Tuesday, but if you ever have any special requests, like Gary, can you cover Amazon? Or can you cover 20-year Treasury note? Or whatever the case may be. The symbols in that market watch, we can cover anything you want. And I'll go through the process. And our students love for us to do that, especially when we're looking at a symbol we haven't looked at in either a long time or never looked at, and how we anticipate where price is going, how it's going to get there, what the software is going to look like, and then go back weeks and months later and go, wow. It's as if we knew exactly where things were going and where it was headed and how it would get there, simply by following the cycles of those cycling time frames. All right, so take care. God bless you. And again, we have several members that have signed up. Thank you for your time and attention. And for everyone else, use the link, sign up, and join us on Tuesday. Take care, and God bless you.